Hello and welcome to another update video about Bitcoin. So I think, Bitcoin, not really much change to the previous video. We have actually entered this support area that I had on the chart. I've made a slight change. I think in the previous video we had already talked about this was wave 4, this was a 5, this was the 3, the higher degree 3, and we could come down in 4 now.
But before we dive deeper into the analysis, first a few words about the sponsor of today's Bitcoin video, Chartprime. Chartprime is a service that provides specific TradingView indicators. There are 5 specific and unique indicators that you can only get through Chartprime if you sign up to one of their plans. These are based on quite complex algorithms and formulas and can be helpful in identifying trade setups, which means they can provide additional signals that could support your trading. Indicators can, for example, also be useful to support Elliott Wave counts to give more confidence. Of course, you don't need to apply Elliott Wave to use Chartprime, and the combination of their indicators alone can provide trade setups and signals as well. They currently offer a 30% limited time discount, so if you are interested in this, check it out. Of course, bear in mind that no indicator works 100% of the time. Here's an example of the Bitcoin chart with one of the range indicators. This indicator combines various indicators in itself, so you can adjust it to your needs, but it basically shows your range resistances, different support resistance levels based on different time frames, and it categorizes them based on their relevance. And this indicator provides you with dynamic support and resistance bands to which the price is reacting. And if you're interested in checking it out, make sure that you use the link in the video description and on their website. You can also read through testimonials and you can join their Discord community, which you can join in case you have any questions about how to use those indicators.
I actually think wave 3 could still be ongoing. So that's exactly what we don't know, the uncertainty, but it doesn't matter in the short term, because if we if we are in the 4th wave here in yellow, or the 4th wave in white, doesn't really make a great difference in terms of this support. So that's why I'm not too worried about that at this stage. See how it carries on. First of all, it now needs to hold this support at 23,340, and it should do so soon, because if it doesn't hold it, then Ethereum, or if it doesn't turn around here now, then Ethereum will probably break its support, and that is not really good for Ethereum. I'm not too worried if they break briefly below it, right? But if they do break this support area, then it will increase the likelihood that this entire upside pattern will fail. So that's where we are. And with Bitcoin, the move of the lows obviously was so far only in 3 waves. I think that's a very important message that I would like you to understand, and that is also where the current risk comes from. So the move down is currently quite impulsive. That's not necessarily a problem, but if you take all of this together, that we had here only basically a wave 1, a wave 2, we are still in the 3rd wave, 4 and 5. We eventually need 5 waves for this 5th wave. As long as we only have 3, the risk is always it will break down. And that's why I give you these support areas. They are based on Fibonacci retracements. And if I'm looking at this now and assume, okay, we rallied here, depending on, it depends a little bit on where we actually went to. But I have now based it on the, let's call it the sort of worst case. And want to give you here the key support area. So around about 23,000. If I draw it exactly, it's sort of 23,340. But again, don't be too fixed on here on $1. I mean, if it breaks briefly below it, it's not a problem. But if we have a sustained break below that support area, it increases massively the risk that it's actually coming down here impulsively, and we will retest the lows from the beginning of the week. This risk is always there when we rally in 3 waves only, and at the moment, as you can see, we only have 3 waves. There's wave 3 standing at the top here, and even if I counted this now as a top, 4 and 5, it would still be higher degree 3rd wave. So we only have 3 waves up. That in itself is not necessarily a problem. I mean, you always need to be aware that after 3 waves a breakdown could come, which is why I took some Ethereum profits today at around 1720. But the bigger problem here is that we didn't really get a nice 1-2 setup along the way. Yeah, it basically had a very, very much extended third wave here. And when these are so extended and you get these rallies with limited structure, then it sometimes increases the risk of a breakdown. If you don't have a solid 5-wave move, like a simple 5-wave move, I would have preferred 1, 2, no, not like that. 1, 2, 3, 4, 5 would have been great as a wave 1. And then coming down in ABC, hold a nice higher low, yeah, build a foundation for the rally, and then do a very nice move up. But it's rarely perfect, yeah, it's rarely perfect. So we always have to take it, as we go, a bit of wayfinding here as we go, and understand the charts as they develop and as the story is being written. Now, important is now to understand Bitcoin has come into the support area. It is nearly at the 38.2 FIB, here at 23,780. Now, don't take these FIBs with too much importance, because I would do the 23,341, but there are a few ways of, obviously depending on which micro count is working out here, there are a few ways of how I can actually draw it, and in this variant, if I add the low of the FIBs of the FIB tool here, we've actually just now touched the 23,990 level here, the 38.2 FIB level. So this might actually be a relevant way of drawing the FIBs just for this particular wave, but yeah, I don't know. And because I don't know, I draw the support area a little bit lower, because I don't want you to, I want you to succeed, don't want you to be stopped out too early if you trade this. And I'd rather add a little bit of safety space in here. But yeah, at the moment, if we consider this a fourth wave, this here would be an A wave down, a B wave up, and a C wave down. Actually quite a beautiful expanded flat pattern. A, B, C, yeah. And a typical target for a C wave is actually the 1.618 extension. So let's see. If we draw the length of the A wave, we go to the high of the B. So we've already broken that. So the next target is typically then the 200% extension, which we've just reached. See a little bit of a reaction. And then we have a very much extended expanded flat is going to the 2.618 extension, typically 23,677. These are key support levels to watch here for Bitcoin. But that's everything I can really tell you about the very, very short term here. Eventually we should find support if this upside should continue further. Yeah, we should find support in here and then get the rally in either this fifth wave, or if we're already one more step ahead. Yeah, so again, this could be a possibility as well, that we had the 4 and the 5 finished here, and that we're now rallying in the fifth wave next. But I would very much prefer that. It would be a nice pattern. If we get one more high here into the 26, 27K region, that would also add some credibility to the entire move of the go to the 1 hour chart of the November lows, because then we have this very nice 5-wave move up, 1, 2, 3, 4, and 5. Yeah, and that could ideally go to that 26, 27K region. When we do that, then we should complete this fifth wave of the first up there. Again, it could also be a more bearish pattern. We talk about that, but if we complete 5 waves, this is at least a possibility that we have developed an impulse here, a proper impulse of the November lows. And however, the stress test, as so often, will come in the wave 2. So when we then come down, and ideally we are holding in 3 waves, sort of the 18 to 18.5K area. It's a bit too early to really give you a definite level for that, yeah. But if we then hold this low, we can say, and then we can really say it with confidence, that the bear market low has already been made in November. Yeah, then we know, and then this would be a fantastic long-term entry point. But until we are holding this support and maybe even see a little bit of a bullish reaction to that support area, which I will be able to define for you, until then, it's still also highly probable to get back into the bear market, yeah, and continue the bear market. So that's why dollar cost averaging here sort of throughout the bear market was important. Taking some profits up here as well. Traders sometimes need to pay themselves, and then This could be in a more bearish version, an A wave up, a B wave down, and a C wave up. Yeah, I always explain that, not in every video, but it's very important to understand ABC, because the C wave up could also be in 5 waves. And if we have here this ABC pattern, then the wave 2 will not hold. Now we will not know that until we test this area. And sometimes I get the comment in the comments, probably new viewers, who say, they can't understand how I'm so bullish because of whatever's going on in the world. Well, first of all, fundamentals of macroeconomics don't really have an impact too much on the sentiment of charts. No, they don't. This is not really related too much, but that's a different story. What is much more important is that actually I'm not too bullish. No, I very much highlight the chance, and I'm leaning still towards one more low in the bear market. But again, I would not be surprised if we get back into a bull run from here. But the risk is still very much there, because this is a highly probable pattern, so-called expanded flat A wave, B wave, C wave, corrective in a wave 4, which will then break down in 5 waves. And then we get into the 13K region, 14K region, and continue with the bull run. Bear market, not bull run. And then we have but that should then be the last low of the bear market. And ideally we're turning around then at some point and we'll get back into the bull run. But this is sort of the uncertainty we deal with. We don't know. We need to take it level by level. We need to take it step by step here in the markets. I prefer that very much. Don't want to be too biased. I think that's not a good way. There are analysts who are already calling for the new bull run to start. In my opinion, inappropriate at this stage. And we want to be unbiased. We want to take it level by level. We want to trade the support areas. We want to take profits when the risk in the market suggests that it might make sense. As, for example, I highlighted to you, I did here when I then bought here. Okay, not Bitcoin, but Ethereum. And I took profits again here today at the top because it became a bit risky. We dropped, and I might make another attempt maybe to buy, but it's nearly midnight here, so I might not. Because this is now in the support area, so ideally this is the area where it will turn around. This is again another high reward, low risk area, and maybe we get that 5th wave throughout the end of the week or next week. That's where we are with Bitcoin here. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.